Welcome to the Presale Pulse Live, a channel that is dedicated to helping you understand everything happening in real estate across Metro Vancouver and the Fraser Valley. I'm Ryan DeLon, and I'm joined by one of the most influential female marketers in the city. Some say she has the golden touch, Suzana Goncalves.
Thanks, I like that intro. I hope you tell that to Reimer after.
Every day.
Yeah.
So it's mid-June, and today we're going to talk shop about what happened in the month of May.
If you're new to the channel, Presale Plus is all about recapping both the presale and the resale marketplace over the past 30 days. We want to touch on everything trending in our industry and ensure our subscribers feel like they have their fingers on the pulse and become real estate intelligent.
And today we're going to talk about what we're noticing in the marketplace. And most notably, we're going to talk about market predictions, right? Is the great post-COVID resale run? Is it at its end? We're going to talk about all the projects that our viewers want to continue to keep an eye out for. And then of course, what do values look like in the coming years? Now, RBC recently updated that the housing forecast indicates a 13% price growth nationally in 2021. We're paying close attention to that, and we're going to dive a little bit deeper on why we're bullish on this marketplace in trending topics.
Our internal MLA advisory team is actively engaged in all major markets across Canada. So if you need data, more information on a specific marketplace, or an experienced second opinion, reach out to us using the links below. And as always, special thank you to Altus Group, Urban Analytics, and all of the industry leaders who helped us prepare for today's segment.
We can't say it enough. We love the fact that so many collaborate and share, and we really appreciate that. First off, let's get going and start with macro look on what's happening in the world around us. We love this segment. First off, we're going to touch on interest rates. Now, they remain low. This is the same thing we've been saying for essentially the last 14 months. Bank of Canada maintained the overnight rate at 0.25%. Welcome news for our industry. Interest rates changed, are expected in 2022. That's a little bit earlier than originally anticipated, which was forecasted for 2023. Variables at 1.29. We have fixed that's kind of sitting around 1.74%. For the most part, we think that those are going to continue to be stable rates in the coming months. May, BC unemployment, 7%. That's down a little bit from where we were in April. And that's a massive shift from where we were a year ago at around 12%. It's tough to say that it's time to ring the bell just yet. We're not out of the woods, but we know that the economy is growing. We love this one. The Canadian dollar, it's trading at 82 cents to USD. This is the strongest the dollar's been for 6 years. Most markets are valuing GDP growth into that mix. And then there's also the expectation that we have strong warning signs around US inflation. We're also going to touch on that a little bit later in the segment. Vaccinations, finally. Right? We're feeling good about them. Many Canadians across the country are in queue on their seconds. That's having a huge impact on lifestyle. We know that airports are beginning to open up. We know that travel considerations are being made, and we know that post-COVID work expectations are all around us right now. And if we're talking about restrictions relaxing, there's no way we can't talk about what's happening in British Columbia. We know that we've seen restrictions in provinces like Ontario really begun to ease. That means a lot to so many small businesses. We know that we're also feeling that locally with fitness, health, wellness, and of course the restaurant business. Stock market still performing incredibly well. Crypto feels like a bit of a roller coaster. Bitcoin all over the map, 30% drop in the last 30 days. Some small recoveries that we're seeing on a day-to-day basis. And when you think about where we're at from a macro perspective, it's incredible to see the rate of change, the pace that's happening in 30 days. Next up, let's talk Metro Vancouver presale and resale. I know Suzana has an opinion. And of course, be sure to check out the Fraser Valley edition. That's following this segment. We're very excited about it. That's the presale pulse for a full market round-in of what's happening on the other side of the water. Suze, if there's nothing else that you want to talk about, why don't we jump into it?
Absolutely. So Ryan, although we saw the resale market slow slightly, we saw the pre-sale market really maintain activity this past month. Inventory and sales were up just slightly with over 2,200 units released and over 1,200 sales. That matched the 56% launch same month sales absorption rate we saw last month. Interesting to note, this volume of released units is approximately twice as high as the long-term average of 1,100 pre-sale units released per month. So the fact that we maintain that absorption rate, I think really speaks to the robustness of the market. Also the third consecutive month with over 50% same month absorption rate. So we're definitely seeing strength and maintained activity in the pre-sale market.
And it seems like everyone is chipping in on the negative headlines right now. This is something that we're hearing a lot in our boardrooms. How far expectations have kind of come from where they were just 18 months ago. So unlike in 2020, much of the activity it feels is centered around Vancouver, both within the west side and the east side. This speaks to really strong activity, but we are noticing that market segments near energy centers are doing particularly well, and especially that's the case in premium markets. The notable sites though are Assembly by Fabric Living in Strathcona, we're going to talk about that, Ava by Think, homes across from Lancaster College. And then, of course, Revive Townhomes by Belfort Properties. Some really great numbers coming out of that. We love to see that sales success on the west side. 2,200 homes released across the Lower Mainland. That's across 17 projects, right? So quite a wide range. And that's double the numbers released in the month of April. And as you mentioned, 50% absorbing, which is a fantastic number. Just a reminder that the 10-year average for monthly new units is around 1,100. So we're actually trending quite a bit higher. And the monthly average for the past year has been around 750. So with a 56% absorption rate, our market is really performing strong.
Now, in previous episodes, demand was driven by heaving competition in the resale market, lack of inventory forcing homebuyers of all types to consider new inventory rather than compete in multiple offers on the resale side. Over the past 6 months, we've noticed developers bringing paused projects to market, but given sales activity, we're also seeing freshly branded projects come to market in this new wave of pre-sale. An important question on the minds of many around in the industry is how approved projects manage the uncertainty of rising construction costs, which is really a hot topic in our industry right now.
So for the month of June, we anticipate 20 new pre-sale projects with over 3,000 units. Over 3,000 doors, and our 10-year average is around 1,100.
Yeah, that's a massive month. Yeah, and also interesting to note that 59% of the upcoming units in June are concrete condos. The last time we saw this much inventory was November of 2018. Feels like a lifetime ago when we saw 9 projects releasing 3,000 new pre-sale units that month. Again, June is going to be a massive month for us. 15 of the 20 upcoming pre-sale projects are condo developments, including 6 concrete towers in Vancouver, Surrey, and West Coquitlam, some hot areas for sure in the market right now. These markets continue to be very popular in today's environment. And of course, we recently highlighted Coquitlam in a market spotlight video, so check that out if you haven't. Townline's Lux in Richmond, as well as Concert's highly anticipated North Harbour in North Vancouver are projects to watch in June for sure.
Moving on to project-specific updates, our viewers want deeper insights into specific marketplaces. They also want to know what's happening in these neighborhoods, and we're going to do our very best to highlight on this. We love touching on some of the multifamily offerings that are coming hot to 2021. Suze, why don't we first start off with Redbridge? This is one of our own. We're very proud of it.
Yeah, one of my favorites, my baby. We sold out phase 2 in June after a very successful phase 1 launch in May. Of particular interest is the online platform we're using for this project. This included a series of successful online webinars, not just for the realtor community, but also for our prospects, and priority registrations and home selection process through our proprietary MLA OI system. We've sold almost 200 homes in that market in 2 months, while the apartment resale market has only sold 133 all year. People recognize definitely how special this community is, and we've got our sights set on phase 3 now.
We should also talk about Autograph just for a second.
Yeah, please.
This is a similar launch in time that we've launched along the Cambie Street corridor. We've had a lot of success with Cambie in the past, and as I mentioned a few months ago, finally Cambie's back. We've experienced a 65% sellout of our released inventory, which we're very, very proud of. And through that process have really established many great relationships with our home buyers and understanding how this offering is so unique from everything else that has landed on the corridor.
So let's talk about Vallejo by Streetside Developments. This is another highlight from May, and it's located in Burnaby Heights. It's a low-rise concrete condo building along Hastings Street instead of wood frame, which is kind of nice to see concrete in that market. This project began sales halfway through May, already 70% sold. Prices started from about $439, which is $880 a square foot, which actually for concrete in that market is, I think, actually a pretty good deal. Functional, large format floor plans, some with roof decks, have made this program definitely attractive to the local downsizers and some first-time home buyers. And of course, Streetside has a solid reputation as well, and that's boded well for them.
Regardless of where the marketplace is right now, there's still incredible value in different pockets. You just have to hunt for it. And I think at $880 a square foot, I mean, let's be honest, you have Coquitlam selling, Coquitlam high-rise that's hitting around the 900 to 950 range. And then you think about what's happening out in Surrey. Right? Out in Surrey, you have price points hitting between $840 and $870 a square foot. So to be $880 so close to the downtown core, I think that's a really special offering.
And Burnaby Heights is like one of our most beloved neighborhoods, particularly in Burnaby. So yeah, definitely great value there.
Next up, why don't we talk West 68th on Granville Street in Marpole. Now, this is a small unit mix project, premium appliances, the first new project in Marpole in just under 3 years, which is something to pay attention to. It's only 64 market homes, and it's interesting because Westland has the interest of retaining the commercial spaces as part of their future office. There are also upcoming towers in Surrey is something that we're going to also pay very close attention to, and then also very active in Metrotown. Now, previews are underway for West 68th. Virtual realtor event and sales is expected to begin sometime early to mid-June. Now, considering where recent values are along the core, and especially what's coming out of Cambie Street, notably by Autograph. Our expectation is that they're well in excess of $14.50 a square foot for concrete. It's also considering the fact that they have a very compact unit mix. So we're going to pay very close attention to how that sets up other future projects along the Cambie Street corridor and certainly along the Granville corridor.
So nice to see some product come on to the North Shore. We've got Millennium Lonsdale by Millennium Development. This project's located on 13th and Lonsdale in North Vancouver, adjacent to Lionsgate Hospital. Notably marked its first COVID-free day on June 10th, an incredible milestone that speaks to the vaccine progress we've made in the last couple of months. Now, 1 beds and junior 2 beds starting from $689,900. Project also includes south-facing 3-bed units with incredible water views, 15,000 square feet of amenities, including outdoor pool, and homes include Miele appliances. Not a bad brand name, I'd say. Project is roughly 25% sold to date out of 162 total units, over $1,300 a square foot. We're going to be watching this one closely. Again, not a ton of inventory in this market, and so seeing their progress is going to be interesting to watch.
So over the next few months, we have 2 incredible offerings that are coming. View in West Coquitlam and The Block in the downtown core, right next to BC Place. These are both Amicon offerings. Let's start with Block. We're really excited about this one. It's one of the first projects that's going to go live in the downtown core. We're excited to be part of that resurgence. And we think our job, quite frankly, is going to be just to share what most sophisticated investors already know. The downtown demand is about to surge. We have some incredible value that's going to come out of that offering. We love where we've been able to push unit plans. We also think that we have some really special amenities, both within and outside of the building, and we're very, very excited to start sharing that with many of our home buyers.
Yeah, we're expecting to do well there.
And of course, we need to talk about View. This is aptly inspired for its second and none location near Burquitlam Station. West Coquitlam and Burquitlam have been on fire recently. The last 6 months have been big. So far for View, demand has also been big. Expect beautiful architecture, incredible value, and what we're really excited about is one of the marketplaces that's most committed to a strong broker partner program. It's something that we're really excited to roll out with our local agents. Why don't we jump into what's going on in some of the resale data?
Yeah, let's turn our attention now to our resale data for Greater Vancouver. Sales have tailed off slightly, but remain historically high. So we knew that the sales pace we saw in March would be unsustainable. So not surprised to see the decrease that we're seeing now. There were 4,268 resales in May, which although down 13% from April, is still 28% above the 10-year average. So all in all, yes, technically down, but a very strong number still. Reassuring to also see supply increase in May, as there were just over 7,000 new listings and increases in inventory across all 3 product types. It does appear that sellers are continuing to be active and trying to capitalize on the strong market demand that we've been seeing, with inventory rising and sales decreasing just slightly. With over 4,200 sales though, a very strong market still, which we see reflected in price changes. Ryan, why don't you touch on that now?
Oh, I could talk about this all day. Big demand has had a huge impact on the overall benchmark price. Composite metric, it's up 14% over the past 12 months. But here's the really interesting news. It's up 8.2% over the last 3 months, and that is a substantial rate of change in any market. Now, we've seen this increase happen for the last 6 months, and as a result, we've seen steady upward pressure on pricing over a 6-month period as well. The Real Estate Board of Greater Vancouver composite benchmark price is now set an all-time high. It's something that we're going to continue to pay very, very close attention to.
So if we look at sales to listing ratios now, the increased number of new listings and slightly reduced sales brought down our sales to listing ratios for the 2nd straight month. However, 39% sales to listing ratio across all product types is still firmly planted in seller's market territory, despite month-over-month drops of 7 to 16% depending on the product type. Single family at 30%, condos at 44%, and townhomes still leading the market at 54%, still well above the 20% benchmark we often see for upward pricing pressure, which explains why we saw it increase, which you just talked about. Overall, less sales than April, but strong market that is more balanced, which is a good thing.
As always, if you guys found value, I'm going to say give us a high five, hit that like button, and we also would love it if you'd hit that subscribe button. That's going to give you access to so much product and offering that can be coming into your inbox. Most notably, our pre-sale pulse, which is every 30 days. It's going to give you access to the newswire as well. That's a daily roundup of some of the hottest topics that are trending in our space, and a variety of other services that our advisories are eager to share with you. So looking forward to see you online and in one of our presentation centers.
Yeah, see you next time.
Thank you.